What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. I am back on the saddle here, back in the office for today and for this week. Hope everybody's doing well. It's nice to be back. Nice little getaway. My wife and I, we went to Turks and Caicos. It was beautiful. Nice little relaxing weekend or week. Of course, I stayed uploading videos, which was kind of a, it's one of those things. Got to take my work with me to an extent just to keep things rolling. I don't want to leave you guys hanging for a week. Anyways, S&P 500 here is actually positive this morning. Something just dropped, hit the news here the last 30 minutes or so. I think some progress in regards to truce talks with Iran. I believe that is the catalyst here today. We'll see if that can hold, but stocks were, of course, down on Friday. The question is, are they just going to bounce back? Is this going to be another one of those one-day pullbacks before we launch through the highs again? Or are we going to see some sort of more meaningful pullback in the indices? We've seen pretty much a one-directional push in the stock market for the last month and a half. I mean, it has been one of the most incredible. I think I heard it was like the 11th best rally in stock market history, which, 11th is still pretty good, considering that you've had, 100 years of data. That's a pretty strong rally, to say the least. And this rally has been kind of combined with little to no pullbacks, which admittedly, as I've talked about many times on my channel, has been a little frustrating, sitting on the sidelines, wanting to be long indices, and yet kind of being put on pause. However, now I'm not so sure that I'm ready to buy stocks unless you actually get a more meaningful drop. I'll explain why here in just a second. But the big story here recently is actually the rise here recently in yields, which I do have a bet on currently. I'll talk about that a little bit more, but basically I think yields could continue to move higher. We have inflation expectations dramatically rising. And yes, you have, some back and forth headlines. Keep an eye on oil, because if oil does continue to stay elevated here, that's going to be a key component to where inflation goes next. If you continue to see a rise in oil price, then it is likely to trickle through to inflation, which is sort of the worry of what is going on in the yields world, right? Dollar index had trended higher here recently. The 10-year yield moved higher recently off of the idea that inflation is on the rise. And we saw that. We had more material evidence of inflation on the rise when we take a look at the consumer price index jumping, but even more so when we take a look at the producer price index number jumping. And do we have Japan here? Yes, we do. Here is another one. Japan saw a huge jump in the producer price index year-on-year number. Why does this matter? Well, because a big jump in inflation for Japan means that their bond yields are going to move higher. Same too with the dollar. And so when you have this, or the US, which is going to put upward pressure on yields and the US dollar, because the Fed will have to hold interest rates or even potentially talk about hiking them. So the market is, in the meantime here, you look at the producer price index ripping higher, CPI ripping higher. The stock market seems to be mostly ignoring this, but I kind of in the camp of thinking that it can only ignore it for so long. If you see the dollar continue to rip higher alongside yields moving higher, right? If you see that story come back into the picture, I think at some point the stock market, risk assets will start to really feel that, especially if we continue at this sort of pace for any meaningful amount of time. If yields, continue to launch higher and we start racing towards 4.75 on the 10-year, if you start making the broader move back up to 5% in terms of the 10-year government treasury yield, it is going to hurt. It's going to sting risk assets, in my opinion. So, and again, I think that you're looking at the stock market with this very big excitement around really strong earnings. And I want to show you guys something that I worked on here a little bit over the weekend. We got back on Saturday, so I was working on this on Sunday. So check this out. This is the earning strength heat map. It's a new tool that we just added to stockbox. If you don't have stockbox, then you should get it because it's awesome. But check this out. What this does is it looks at all of the stocks that we have within stockbox, and it shows you what percentage of these stocks are seeing their earnings reports come in really strong versus not so strong. So if we take a look at stocks beating their earnings per share estimates, the number is very, very high. Like this is a really positive indicator of the underlying economy, but it gets challenged if you see inflation continue to rise. So looking at this, what we can see is we can see a lot of green, right? There's a lot of green on this screen, basically signaling that most of our stocks here within the ones that we track here are showing strong double beats, right? You're seeing lots of really strong earnings per share and revenue beats. That's a positive signal for the stock market. This has been, by the way, part of the big reason that the stock market itself has been ripping, right? Strong earnings. That is a lot of people want to call this whole move manipulation, fake, that the stock market's not making sense right now. And I do understand and agree that there are some reasons to be concerned as to why this market won't pull back. But this is it, right? This earnings count, this heat map right here tells you a big part of the story. You have most stocks putting in really, really strong earnings reports. And so you can't ignore that. If you're somebody watching the stock market, if you're watching this and saying this thing is manipulated, it can't go higher, it just keeps going up every day. I hear that. I hear that frustration. But I'm also kind of pointing out that while the macro is a little mixed here for stocks, doesn't look particularly great, inflation on the rise, etc., we can't ignore that stocks have been putting up remarkable earnings. And so that puts into question, or it helps to answer the question, why are stocks up so much? Earnings, really strong. However, if you start to see the macro stay problematic, if inflation continues to rip higher, if interest rates continue to move higher, then what happens? Well, that poor macro could start to negatively impact this. And this is where I think the stock market is hanging its hat right now. Stock market's up so much and holding all those gains because the earnings reported by stocks are strong. So if the macro stays painful enough for long enough, and I want to show you this, we have a macro scanner that's kind of isolated to stocks within Stockbox. Stocks impact macro-wise, not great, right? You have retail sales met expectations. You had CPI come in higher than expected. Producer price index came in way higher than expected. Wage growth was softer than expected. Jobless claims a little weaker than expected. So the macro has turned decidedly worse for stocks recently, according to this heat map. So when I look at the market itself, when we look at the stock market, the risk reward to buying stocks here for me is just not good. Again, depends your time horizon. If you're somebody who's just a passive long-term investor holding for 10 plus years, do your thing. But for me, I'm looking at this and I'm thinking, I think we have very, very possibly room for a pullback. I am unwilling to short this market because the trend is decidedly up. The AI craze is very hard to bet against. So I'm not willing to do that. I also, if I go to my asset scorecard here for S&P 500, do not have a bearish reading. We have a neutral reading. Technicals look really strong. Seasonally, still a decent time of year. 4-hour and daily chart upward trend. Crowd sentiment is actually getting more pessimistic here recently, giving us a contrarian bullish signal. So there is nothing here that tells me I'm going to short the stock market. Meanwhile, institutions, however, they're pretty bearish on stocks, or at least, let me take that back. Institutional week over week changes showed some selling, right? If we look at futures contracts traded by the Commitment of Traders report, we can take a closer look at this data and we can go COT data, we can go COT velocity. I want to show you guys something that I found and talked about on the Sunday video. They sold SPX, Dow Jones, Nasdaq, Russell, Nikkei. We have this is the new COT velocity chart that we built within EdgeFinder. I think it's one of the easier ways to visualize COT. And actually, I asked you guys to vote at one point. Some of you guys might have remembered. 60% people said or I think it was like 65% of people in the audience said they prefer this chart over our other ones for COT data, which I thought was both awesome and also a little frustrating, given that we spent the least time building this one compared to the other charts. However, at the end of the day, our goal is to build tools that help traders spot trends and ideas. So if this is the one, this is the one. But if we look at this, we see stock getting sold here on the week over week. We also see stocks being sold month over month. Like we see some heavy selling going on the monthly change from the Commitment of Traders data. So institutions seem to be making a little bit of a run for the exit if we're just going off of COT data, right? Institutions have built up a little bit more of a short position on SPX. If we take a look at the NAS in Q, you can take a look at this and see, look at that. There's decidedly selling going on. Despite the stock market going up, right? We have a little bit of selling going on in the institutional side of things. So I'm not ignoring that. I think that there is a good chance that we do see in coming weeks some softness in the stock market. So I'm waiting, I'm watching. I think that if you're a technical, if you're getting technical on this chart, you have a long ways to go before you even get to the 50 moving average, right? Here's the 20, it's not that far away, but look at this 50, you've got 6.5% away. If you're talking about the 200-day moving average, you've got 8% down from here to get back to the 200-day moving average. To me, the risk reward becomes a lot sweeter if you do see this kind of pullback, right? If you see this kind of move, the risk reward on stocks starts to get a lot more attractive at these levels for long setups. That's my personal view on it. So we'll keep an eye on it. So that's stocks. Let's take a look at gold here. Gold saw some interesting moves here recently. We are getting closer once more. And we said this like a month and a half ago, that hugging the 200-day moving average could be a theme for a little while with the gold chart. Gold to me also looks challenged. Here's why. I talked about it on my Sunday video at length yesterday. The scenario for gold has changed dramatically. During 2023 through 2025 into 2026, you had an environment where inflation was moving lower, oil prices were moving lower, interest rates were forecasted to go lower and lower and lower. That was incredibly bullish for gold. Um, and I know people say, well, institutions or central banks are still buying gold. Well, it's fair, but that's one piece of the story. It's not enough, I think, to justify just because central banks are buying gold um, to justify that it has to keep going higher every single day. Institutions have been buying gold for like a decade, so there have also been very downward trends during that same period of time. They're pretty price agnostic. They just buy if they just want to convert fiat to gold. They don't care what the price is. They're just moving in. So that is in some ways a positive for gold. But what is a more negative is that we lost this story. We lost the inflation cooling, interest rates getting cut story. We've lost that theme. Now it could come back if you get a sharp drop off in oil prices, if we see the producer price index, the consumer price index, the PCE numbers start to cool off, if you see yields start to move lower, then yes, gold could start another uptrend. But that's not the story right now. So as a macro trader following the trend, what is the trend right now? Well, what's the trend? Well, inflation is moving higher. That's a bearish catalyst for gold. And I had somebody ask me this on my video yesterday. They said, Nick, that doesn't make any sense. How is inflation going up bad for gold? Isn't gold an inflation hedge? And it is one of the more common misconceptions about gold. People oftentimes think gold is a hedge to inflation. Over the long term, yes. Over the short term, it's actually pretty terrible. In fact, it has a pretty inverse correlation to inflation. Here's why. When inflation goes up, what do central banks do? Central banks hike interest rates. They stop printing as much currency. Gold loves when currency is getting printed like crazy. So inflation going up issues a response from central banks going forward that is painful for gold. Gold likes when central banks are printing money like crazy and that the appeal to buying bonds is really low. When bond yields go down a ton, gold loves that because gold's like, well, now people are going to choose to buy gold instead of getting no yield in bonds. Right now, bond yields are moving higher. They're becoming more relatively attractive versus gold just simply on the yield that they offer. If the 10-year yield rockets up to 5%, investors will look at this and say, more people inevitably will look at this and say, 5%, 5% yield, I'll buy that. I'll buy bonds at 5% yield rather than buying gold, which offers you 0 yield and over many different instances has delivered 0% returns over the course of a 10-year period. A lot of people don't know that about gold. There have been numerous periods of time in history where if you bought gold and held it for 10 years thinking you were going to do really well, you made 0% returns. So here's an example. If you had bought, now I know I'm cherry picking the highs, but a lot of people, they inevitably think they're not buying the highs when they're buying the highs. So I'm just giving an example. From 2011 until 2023, you would have seen 0% returns and you would have had a massive drawdown buying gold. Well, what if you bought it over here and you saw this huge run up? Well, even still, look at this. Let's say you bought over here, you saw a huge gain, and then it came all the way back down, stayed flat, and that is another almost 10-year period, about a 10-year period before you saw any return on gold. So, and here's the nightmare scenario. If you had bought gold over, let's say even over here, right? 1979 until 2005, you saw 0% return in gold and you lost a ton of money to inflation. On a real actual basis, you lost to inflation big time. So my point with saying this is I like gold for the longer term, but I also think it is very important to recognize that gold's had a phenomenal run. People have gotten used to it and think that it's going to inevitably continue when it does not have to. Gold could go down for a couple of years. Gold could go sideways for a couple of years. I'm not necessarily saying I think it's going to go down for a few years. I'm just saying it could. So you can't you can't draw the conclusion that it has to go up. Over the very long term, 20, 30, 50 years from now, yeah, gold's going to move higher, most likely. But I'm just pointing out, nothing in trading is easy. So anyways, bond yields moving higher is number one threat to gold right now. It is a very bearish catalyst. It is a bullish one for the dollar, especially if we continue to see that 10-year yield rip on inflation concerns. The Fed will have to juggle the idea of possible rate hikes. And if that takes place, if bond yields continue to rip, the dollar is likely to finally break out of this range. They're pretty attached to the hip right now because they're both moving on inflation expectations. So we'll see. What does that mean for risk assets? It means things like crypto, stocks, etc., would move lower if this thesis comes to fruition. Like if you see oil stay elevated, inflation continue to rise, it would mean dollar up, bond yields up, and stocks and crypto lower. So that's kind of still my base case right now. My base case is I think inflation is trending higher. Of course, I can change that at any time. At the end of the day, as a trader, you have the right to change your mind. So if you see inflation, if you see oil prices collapse, if you see peace deals and see new information hit the wire, then I'll change my perspective. I'm just following the trend right now. And the trend to me seems to be very clearly inflation's moving higher, yields moving higher, dollar moving higher, etc. If we take a look at asset scorecard here and we look at what we have going on with US dollar, so the US dollar, technicals are moving higher here recently. We also have an overall score of +5 on EdgeFinder. Sentiment and COT institutions did some buying on dollar. So that's bullish for dollar. We already talked about trend and seasonally. It's a strong period of time for dollar. If we take a look at inflation, inflation is the kicker here for dollar bullishness. PPI much higher than forecast. CPI much higher than forecast. Yields moving higher. These are bullish catalysts for dollar. Jobs market data is a little bit mixed. Strong NFP, weak claims, weak ADP, healthy job openings. Economic growth, not so hot. GDP missed expectations, manufacturing missed expectations, services missed expectations, consumer confidence still remains okay versus expectations, but also pretty low. So we'll keep an eye on that. But generally speaking, this puts me in the camp of thinking bonds move lower, dollar moves higher, yields move higher. And we'll adjust our thinking if proven otherwise. Quick look at put call ratio stuff. Let's see what's going on here. Stocks saw, this is, you're seeing a bounce today, which I thought was interesting, considering on Friday we saw a huge surge in put demand. So if we go take a look at SPX, we saw a bunch of puts come into the market on Friday. And of course, a little bit of a bounce here today may shake out some of the bears there. Same with Nasdaq. Let's see, what else do we have? Gold saw a huge surge in put demand here recently, come back a little bit here on Friday. So we'll keep a watch on that. Here's Nasdaq. Nasdaq May 15th. So that came in pretty neutral there. So nothing too sharp on that side of things. Let's take a look at oil. Oil, a lot of call volume coming in here, but not at an extreme ratio. Let's see what else we have. Retail sentiment. We'll take a look at retail sentiment here this morning. Let's just go major currencies for a second. In terms of US dollar crosses, crowd sentiment is still very bullish dollar Swiss, but very leaning bullish Kiwi short dollar, leaning bullish pound short dollar. So crowd sentiment is more in favor of longing things like pound dollar. And I'm not surprised because like it's very consistent what happens in the retail trading crowd. Like they see a chart like pound dollar and they want to try and buy this, right? They think, oh, it's come down, let me buy it. Where oftentimes what takes place is like really strong trends. Let me go like minor currency pairs for just a second. So if we take a look at some of the more decidedly trending ones, maybe is Kiwi CAD moving strong? Let's see. Kiwi CAD kind of mixed. Let's look at Aussie New Zealand. This is an easier one. AUD NZD. So if you look at this currency pair, this is one that is just trending, right, to the upside. And what you might expect is like, oh, would retail traders be chasing that? It's actually the opposite. A lot of times retail traders try and fade this. They try and say, this is overdone, I'm going to short this. And you can see that time and time again in retail sentiment. So what we've actually done with this indicator, retail sentiment, which is available, by the way, there's a free variation on our website. If you want to check it out on a1trading.com, you can pull this up for yourself. It's a very useful tool to keep an eye on. If you take a look at this, a lot of times what you'll see is that crowd sentiment is oftentimes short on things that are trending higher and long on things that are trending lower. And it's kind of like the pain trade. Like the retail trader seems to, on average, be on the wrong side of trends and stubbornly refuses to take a loss and join the trend. They try and fight it. So if we look at things like Euro Kiwi as well, this is another one that's been mostly trending lower, and retail traders are on the long side. What about Euro Pound? Euro Pound, yeah. So another one where you've been having this overall downward trend, and yet retail traders are very much on the long side of Euro Pound. It's a very like repeated pattern, which I think is quite interesting. Pound Swiss franc. So in this one, retail traders are long, which makes sense. So just something to take with you. Again, it doesn't mean that retail traders are always wrong. Sometimes they're actually right, but a lot of times it seems like they're very early to ideas. And so that can be sort of the pain trade, if you will. Anyways, by the way, guys, we are adding a bunch of stuff on our website. If you guys don't have this page bookmarked, head over to a1trading.com. I'm going to drop this link here in the chat. If you are watching on a desktop, take 2 seconds, make sure to bookmark our website. We are adding a bunch of free tools here. We have free retail sentiment, free COT data. We just added some heat maps. So if you're a currency trader, for example, you can pull open our free currency heat map page, our stock market heat map page if you're interested in stocks. We also added there's a crypto one too, crypto heat map here. So you can actually do all sorts of different things on here. So this is, again, these are free tools on our website. So if you want to check them out there, we also have some broker and prop firm discounts going on right now. We're not a prop firm, but we offer several different discounts for our sponsors. So if you're interested in checking out those, just head over to the broker and prop firms section on our website. We also have several completely free, no credit card, no nothing required. Just head over to our website for free course material as well on fundamental analysis, technical analysis, risk management, how to get funded, options trading. This is free game for you guys to take advantage of. There is, like I said, no paywall for any of this. Just head over to our website and take advantage of all the free stuff that we've got going on over there. And make sure bookmark the page, right? So bookmark our website so that you can come back and spend a little time on it each day if you're trying to improve as a trader. Taking a look at dollar index. Dollar index has a pretty big level of resistance that it's testing right now. It's going to be this 99.25 level. We've been just choppy on dollar for quite some time, looking to see if we can actually get above this area. If you start trending here, above that, then very well we could be headed back up to the top end of this range and perhaps beyond. I've pointed out on the longer term, I still think the dollar index has room to continue to trend higher or move higher. Relative to other currencies, I think the dollar looks pretty strong, pretty attractive. And we'll see. At the end of the day, the US has issues, but so too does the rest of the world. And the major advantage of the US is that the US has tangibly more growth than most places. Let me show you. So if I take a look at our economic strength index, right? This is a way to look at currencies. It's more of a long-term fundamental ranking indicator based on the latest available data in things like GDP growth, unemployment rate of those countries, interest rate, CPI, and real yield. If you take a look at US dollar, it's getting the highest relative strength score because it has the strongest GDP growth of the major countries here, Switzerland, Japan, UK, Aussie, New Zealand, etc., Euro, CAD. It has relatively more economic growth. Interest rates are elevated. That's attractive. That's foreign investment coming in to take advantage of those higher yields. We also know that the US stock market's very strong and attractive to foreign investment as well. What do people buy US stocks in? They buy them in US dollars. Unemployment rate also relatively stable at 4.3% when compared to this list. So, I think that CPI on the rise takes away a little bit of the real yield for sure. But that very well could, like I said, could see interest rate hikes at some point if that inflation continues to trend higher. So I think dollar still looks relatively attractive on the global stage relative to peers. So that idea has been one that I've held for a little while here. Really we caught, especially when it was Kevin Warsh that got selected, we made the early on prediction that Kevin Warsh would likely be more hawkish than people anticipated him to be. A lot of people think he's just going to cut interest rates dramatically, but remember, the Fed is a committee. It's a democracy, right? The Fed has to have votes from his peers. He can't just come in and say cutting rates now. It has to be a committee voted on thing. And so if that is the case, his work's cut out for him, given that, he wants to reduce the Fed balance sheet. That's one of his big things, which I think is actually a pretty decent idea, but it's not an easy one. Reducing Fed balance sheet means selling assets, selling bonds, and what does selling bonds do? What does selling bonds do? It causes the yield to go up. That is directly the opposite of cutting rates. So again, I think that the new chairman is likely to be less hawkish than people anticipate him to, less dovish than people anticipate him to be, if he is actually indeed going to try to effectively do a proxy rate hike by reducing the Fed balance sheet, and has inflation running up into the beginning of his term. It's difficult. It's a difficult dynamic for him. Look at ServiceNow. What's going on with ServiceNow? ServiceNow is up 4%. Nice. Very nice. Nasdaq, US stock market just opened up here. I think we have our next show host coming on. I just want to check the live stream schedule. By the way, if you're a regular fan of the show, you can also head over to our website and click on A1 live stream, and you can always see the schedule. So we have Ivan coming on, supposed to be coming on now. So we'll see if he joins here in just a second. So just head over. If you're on our site, just go to live stream right here, and you can check the schedule for who's coming on next. So we will see. We received a message. Ivan says he's running late. Okay. No worries. No worries. Yes. So that gives me a chance then to show off more about some of the stuff we're working on here. So we added a earning strength heat map. One thing I want to add next. So I'll give you behind the scenes. We have so many projects that we have to do behind the scenes. But what I want to do is I want to plot this number over time. I feel like that's a really powerful indicator to add to stockbox. So what this does, the earnings season heat map, it shows the percentage of stocks that are beating their earnings per share estimates, right? So we have a lot of stocks beating earnings, which is fantastic. But what I'd like to do next is plot that percentage over time. So imagine you have, I know this is really small, but bear with me. Imagine you have this 85% number. So that's like right here. And then we could plot that over time to see our stocks beating or missing expectations. I think that would be a very powerful indicator to add to Stockbox. So that is on the radar of things that we are going to be building. We have a ton of stuff. If you're a stock person, Stockbox is going to the moon this year. So stay tuned. We've got a lot of stuff coming. We also just finished a earnings report AI. So what this does is it looks at, earnings reports. Let's say, I don't know, we'll go to NVIDIA's we don't have NVIDIA apparently. Might be giving us some. Actually, we have new NVIDIA data coming out pretty soon, I think. I believe, is NVIDIA earnings this week? Okay, so something's not working today. Well, ignore I said that. Let's see if we have any working ones. What's going on here? No data found. I guess everyone just didn't have earnings anymore. Well, ignore that. We got to fix it. It's still in development. But yes, we have a new earnings report AI that gives you a grade, a report card on how the underlying earnings. Okay, so it's working on this page. That's so weird. Anyways, here's like Apple's earnings report grade. So we have a B rating here for Apple's latest earnings. We can see that the forward guidance is neutral. No specific details on raising, lowering, or maintaining projections for next quarter or full year. Commentary highlighted strong iPhone demand and services growth. So basically, we have a tool that will read into the earnings call of underlying companies as the data drops for their earnings report. So if you're somebody who's interested in stocks or learning stocks, this tool automates just like EdgeFinder does for currencies, commodities, indices. This automates a lot of stuff for stocks and sectors. I've got a lot of sector scorecard stuff coming too. So stay tuned on this. Stockbox is, like I said, it's going to the moon. Anyways, guys, we have, if you want to check out Stockbox, if you're interested in getting a trial, I know a lot of you guys already have EdgeFinder. If you want details about Stockbox, head over to our website. You can explore EdgeFinder or Stockbox. We have tutorials. We have trial information. We have all sorts of stuff available on our site for these tools. But if you want to try it out, or if you are just interested in purchasing a copy of Stockbox, chat with us on the website. You can speak directly to a member of our support team, or we'll drop a link here in the live stream chat to where you can speak directly to them. With that said, up next, we have Ivan, who's going to be taking over the show. He has arrived. Can I use Stockbox for investment? Stockbox is a research tool for traders, investors, swing traders, position traders. We have all sorts of different stock traders and investors using it. So it's an analysis screening software. So yeah, check it out. Anyways, up next, Ivan, just after this. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
According to leaks from Al Arabia, that Iran wants long, multi-stage truce. They demand gradual and safe opening of the Strait of Hormuz. They agreed to long-term nuclear freeze instead of full dismantle, and unconditional transfer of enriched uranium to Russia instead of America. Hello, everyone. Long time no see. I feel like I'm backsliding here, so, back to normal. Then I said yesterday, what did we deliver yesterday in the meeting? On a weekly planning meeting, if you're on Discord, I said we're gonna have a pullback on euro dollar, we're gonna have a pullback on pound dollar, we're gonna have a pullback on New Zealand dollar. Did we get that? Boom. Not necessarily a tradable idea per se, or anything intended, but still the idea came to life. Now, with that message from Iran, will that lead to dollar weakness and euphoria throughout the galaxy? Not necessarily, because we still don't have an opening of the strait. We still don't have what we want or what we need. Take away this idea. So then, what is it? What is it? What is it? Is it a bull blast today? Yeah. I mean, it depends if you have too much leverage. Unless you are, I don't know, has Nvidia fallen? Well, not that much. What about Alpha? Bet. Google? I wouldn't say so. What about Meta? something is there. But if you are in dollar, I mean, it has dropped a bit. Wouldn't you argue that the rise in the, for that matter, dollar index, the US 30 government bonds was a bit rapid, or for that matter, the 10-year, or for that matter, the 2-year? Weren't they a bit too, okay, well, it was US 02Y, sorry, typing. E02Y. Wasn't the rise a bit too quickly? The question I was asked yesterday and was presented to me was, for that matter, the UK or the US debt yields, are they presenting a bubble, or are they going to lead to a sell-off in the stock market? Is it going to lead to broader, let's call it, bloodbath? And my position yesterday was, I think it's a bit too fast and a bit too rapid. It might be a high, doesn't need to be, but it seems to be justified with the recent inflation numbers we have been given. And then, I'm not going to say I told you so, but, there is a part of me that said, chill out, relax, breathe with your breath and tummy. And okay, what is the next likely scenario? Where are we and why are we here? So we saw that the drivers, or the difference between dollar index and in the 10-year is not necessarily the same. It's not driven by the same drivers. Dollar has been weakening, while the yields has not really been weakening in the same period where it should have weakened. Where we had lower inflation in 2023-4, up until 25 or so, at least. We went from 9 to 2. 2.8 or something, 2.6, 2.5. And we're now rising again. Okay. But then again, where does the market ride in this? Where are we going now? And it seems to be market is not necessarily taking this dollar strength they have now, Thursday, Friday, taken a bit more seriously. But I don't see them, they're a bit apprehensive. So that leads me to where we're going. Where do I think we should go? Are you still short on euro dollar? I have no euro dollar short positions on. Nor do I believe I have posted such in recent times. And then the question is euro dollar. I said, and hit myself here, so should have posted that on Friday, Thursday. My bad. Haven't been in charge since, but that is my issue. No, we have the pullback. The question then is, did we just rise up to sell, to a level to sell yet again? I said we should go to 1676 to about 117, and then we should look for shorts. And then I explained from last week, we did so. And Monday morning, 9 a.m., we rise, and then we peaked about midnight to Tuesday, about 6 p.m. This is 6 p.m., 8 p.m. New York time, and that's kind of where the peak was. And then we fell. And that's kind of what I'm expecting now. So right now, I don't see, I see the drop, but I don't see the immediate danger to a brand new lower to euro dollar. If you ask Max, he's going to be like, this is going to be short. This is going to fall. And he has probably made a buck and a buck on the euro dollar shorts. And he shorted up there, and I was like, okay, you do that. Great. And I felt, I'll beat you. But he beat me instead. So I also said yesterday, this isn't a tradable idea so far. It is still just a reverse, just a pullback to short until we get brand new information from Trump or Iran that would say, okay, we are ending the war to a great and substantial deal. And I would imagine that maybe this could have been some kind of catalyst. It's dollar strengthening, so it doesn't seem to bother the market that much. because it still doesn't provide us with a reality or with the reality of action opening of the trade. And until then dollar is going to be stronger. We're going to have higher inflation and such. Right now, we're seeing senior officials says the U.S. has shown flexibility on ongoing discussions, including over limits to Iran nuclear work. That's positive. That's dollar bearish. Is that dollar bearish for a minute? Is it dollar bearish for an hour? Is that dollar bearish for a week? Probably not. But again, no matter what the data tells you or the news tells you, sorry, no matter what the headline tells you, you're still going to revert back to what are you looking for. So I can say, as a trader, I acknowledge we have fallen. As a trader, I want to be a buyer in a bullish trend. The question to you as a trader, is this bullish? I would argue that a bullish level is 114.80, and a bullish level is all those other levels we did as we were rising. As we were rising up. And then it broke on Wednesday, Thursday. Fair enough. And right now, what do we have now? Until we start to break higher, and we use that as a support 1 and this as support 2, we have a bearish trend. So if you feel like, I'm gonna sell this and hopefully against Evan and make all the bucks that I've never made in my entire life, if that's what you want, then sure, Max is one of those. And though it's not financial advice, what I'm saying is, if your conviction is to sell euro dollar, don't let anybody hold you back if that's your strategy. But there is a warning from me, is that I see this as resistance. I see this as micro resistance. And it can easily be broken, as it has been done very many times before. But regardless, so to me, I see your dollar going higher. I'm waiting for it to reverse, break above 16.53, come back down to 16.30, make a new higher high, turn around, and we are going bullish again. And that's the simple kind of review of your dollar for me. Is it against inflation? Yeah, it's against all inflation at the moment. We're going to have rate hikes in Europe in June. Woohoo. But that doesn't stop the seasonality being your dollar bearish. That doesn't stop this US inflation to be going higher. And it doesn't stop the people being very, pragmatic. Is it pragmatic? Being factual about the Iran war and saying it's closed. And then you have my camp who says, well, the driver higher on euro dollar that confiscate or runs over all those drivers are the short-term volatility and run to risk on when we have an ending of a war. It's been back and forth ever since, but you still have to trade it because that's the biggest driver at the moment. Simon says, yeah, as I said, the US has shown flexibility in ongoing discussions. Great. So that, what if your dollar now goes higher? Woohoo! You still have to adhere to your rules. My rules are 2 higher highs and higher lows, and my other semi-rule says somewhere around London Open tomorrow is going to be our so new high now and then pull back tomorrow. The same can be said for pound dollar. It is making a new high, but it's still very fragile to the political risk that is in the UK, with Keir Starmer being tried to be thrown out of office, but he has fought back. The reason for why pound is falling so hard is because the alternative to Keir Starmer is someone who wants to spend a lot of money. And that, in a situation where we are in the brink of having maybe very quickly a rise in inflation, it's not a great timing. We have a Liz Truss 2.0 situation. So to me, as long as we are above 133, I'm pretty happy. I can look for a pullback to tomorrow. 133.60 would be great. I mean, high now, and then pullback, and that would be a aggressive number 2 bid, probably number 1 trade, and then we can see does this turn higher. And again, it's a very aggressive entry, but again, 100 pips stop loss up to there, up to about 300 pips or something higher. I think it's pretty good. Okay, 1 to 3 risk to reward ratio. But again, we have to fight the political problems in the UK. Do you want to do that? Bank of England is not priced into hike anytime soon, I believe. So that's against that idea. That would be great to have that as well. On top of it, we see Bank of England 20% hike is supposed to be 100% or 90%. And possibility of a hike until when? Current 375 and before. Market is currently somewhere in September, it seems like. Somewhere here. Okay, maybe then. But that's still very far out from all the other G7 countries that we're using, where Europe and Bank of Japan is pricing to hike in June, and RBA or so almost at least. Almost around July-ish. No, sorry, July, August-ish. And ECB priced in to almost hike another time in July. So, that would lead to a lot more strength in the pound if it was priced in to hike as well. I've seen people ask for gold. I'm bullish. Okay, I haven't seen the chart yet, okay? I'm bullish. I want bullish trend. I want to pull back, and I don't want it to be elevated. Okay? That's my reasons. Okay. All right. Okay, cool. Great. I like this. I marked at that level. I don't know when I marked that level when we were here, probably last week. We came that all the way down to 4475. That's all right. It's almost a new low, but of course it's gold. Wherever the market wants to go, it goes, even if it's a brand new lower low, just to kick out stop loss hunters. Sorry, take out stop losses. But I mean, can we get a pullback tomorrow, or can't buy the high now? But if we get it back down to 455, maybe. I think this is one of the better situations I've seen in a very long time. As long as we just don't skyrocket. A modest target is up to 4787. That's pivotal points. That's not financial advice, but back up to resistance would be something that I would look into doing. So maybe this is one of the times that Ivan could be getting into this. Oil should be going down to 80. Hasn't been down to 80 for a very long time. Market is not pricing in any resolution anytime soon. We still have it closed. And it is what it is. We also saw over the weekend a drone attack on a nuclear power plant in United Arab Emirates. So is this Iran now trying to be back and forth doing, shooting, and then, there's actually progress. Just to mess with us. But at least the oil market is not really buying it's not necessarily buying the story that comes out in the news right now, but it's more like, what is Trump going to say? And we don't really have a mutual agreement to an end to any, or we have a ceasefire-ish that is just being extended. And we saw the Israel-Lebanon ceasefire being extended, even though they are launching things at each other. So this is more the picture. Do we have an agreement? Do we have a ceasefire? Is everything going to be all right? And the oil market says, hold on a minute. It's not there yet. Ivan, wouldn't that Would that suck if we don't want another? Okay, and that would suck if we don't want another XPS gold. You need to pull back. Simba, can you rephrase that one? We don't want another SPX gold. You know, pullback. I said yesterday this was the pullback. It's not necessarily trading advice for whatever, but it's more of okay. It's still intact. And if we go lower down to 6,000 or down to 7,000, I'd be like, cool. Okay, I want that. But there are still two thoughts in my brain at the same time. A and B. Did I buy that? No. So can't really say anything about it, can I? But yeah, 117 will be interesting to watch. Yeah, I would agree. Definitely a lot of seller pressure coming in, a lot of interesting things coming in. Aussie's still alive. Rock on. Rock hard. Okay. Like what I see. I like what I see. Okay, so in terms of technicalities here, just to make everything a bit less messy here. In terms of technicalities, right? So either you buy the bottom because that was, or do you buy the low out of nowhere and then you hope and pray that it doesn't fall further? That's one strategy. That didn't work very well here. And then the other part of the strategy is, okay, you have the low, fair enough. You have to give up some of your risk to wait for a new higher high. You have a new higher high, and then you say tomorrow, come back to me, baby, and then you go higher. You can then say that support and resistance at 7160 or something or so. Yeah, I think that's pretty much. I'm not going to take a trade because that would be buying into another losing trade, but you know, if I wasn't in a position, I would have considered that greatly and hardly. But again, tomorrow. So right now I'm just setting you up. You know, possibilities for dollar weakness. That's all I'm seeing. And is there a dollar strength coming in? I don't know. But if this one turns around and goes higher, then what did I say? That shouldn't matter to you. What matters to me, to you, from me to you, is stick to your plan, stick to your direction, be confident in what you do. And if you are scared, if you're worried, if you feel like, you know, I mean, I don't know, I'm the guy. You can come talk to me. I can tell you. I can put you straight. I can give you support, and we can come to an agreement. Okay, this is what you do based upon your data. And as GGG says, possibility or probability, meaning what does the data tell you? What setups are you supposed to be in? My data tells me I should be in those positions. I should be looking for those reversals. I shouldn't be chasing a new lower low that was made on Friday and to short those, because that generally tends to be a pullback in the making. And guess what? That's what happened. All right. So you head over to my YouTube channel, and then you get in contact with me, or through Discord is probably a better place, but since the link is already there. And then you're like, Evan, I want to have a chat. And I say, cool, great. How do you do in your trading? Show me how you do in your trading. And then we'll look at your reason for why it's not really working. It's your psychology. Is it your technical trading? Is it your entry? Is it your stop loss? Is it your take profit? Is it your mindset? Is it the market? Is it the beta? Because if you're trying to make money in the market that doesn't really range, so just only range and doesn't really trend, and you're making flat nothing or break even or losing or something, that's you're not far off. But if this is a market that goes through the roof every single day and you're wondering why you're not in those, then we have a structural thing to be talking about. I disregarded dollar Swiss first for a number of reasons yesterday. And that also seems to be running around slightly bearish, at least. But my baby, dollar yen. I think this dollar weakness is only going to make us a bit of a pullback more than anything else. We had a high today and then it came back down again. I think this is the trend. We can, as I also said, I was a bit spooked by Bank Japan on Friday or Thursday, and then again on Tuesday. So they are there. And I thought, what about 159? We got it for 159. Hasn't really happened anything yet. But don't be spooked that it might come back and do that or that. That's why I kind of kept away from yens today, because I don't really want to encourage it. You know, we all can see with our blue eyes, or brown eyes, sorry, with our naked eyes, that, you know, it's bullish, it's great, but we might be tormented in the meantime. So have a bit of a chill pill there. Wait for them to, maybe for dollar to become weak, dollar yen to go lower again, and then you would be riding the flow. If not, because what I'm waiting for is, I believe dollar yen should go higher, but I'm also waiting for the unwind of the carry trade with the Bank of Japan going into hike in June, but it doesn't seem like the market is really pricing that in. And when we have the divergence of lower rates in dollar or lower rates in the US and higher rates in Japan, that would create the unwind of the carry trade, meaning exiting dollar bullish yen positions, or New Zealand yen or Aussie yen. But it hasn't seemed to be happening in the masses yet. Could also be happening together with a rate hike and together with potential intervention. But nevertheless. So that's for me. I hope you're having a great day. Looking for the possibilities for tomorrow. You come to me when you're starting with your trading, either on my YouTube channel or in Discord. And yeah, have a great time with Alan. Boom.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good morning, ladies and gentlemen, or afternoon, wherever you guys are watching there in the world. Hope everyone had a fantastic weekend, and markets are pretty happy today, I would say so. It seems like markets are trading a little bit of risk on here today. You do have some developments going on into the Middle East, from my understanding. Some more progressive talks there when it comes to the uranium front, and I guess lifting the sanctions when it comes to what's going on in Iran. So right here, senior Iranian source, the U.S. has shown some flexibility in ongoing discussion. So, taking the headlines away here, you can obviously see that reflected versus or by the price of various asset classes. So you have oil here, lower here, softer on the day, minus 1.2%. And the big one, the bond market is starting to get a little bit of a lift off here. So yields are lower. 2-year yield is down 0.8%. So the bond market is trading softer here today, but nonetheless, yields are still elevated here. But that was the big thing on Friday, right? Friday, the bond market was selling off. Yields were, going higher. Rate cut probabilities were slashed away, and we were going more into the rate hike probabilities. So that was pretty much the theme that was trading the market on Friday. Equities were lower. Now they have since somewhat recovered here. So S&P is seeming to have found some kind of support on this headline. But again, we'll see, right? The bond market is the real one that's really driving the price here today. So yields are lower. So what that means is, for the dollar, we are hitting this level of resistance here. The dollar has been, trading in a range like currencies usually do, right? So currencies, unlike equities or unlike gold, for example, well, gold, when it was having the perfect environment, currencies tend to chop around. They tend to trade in big ranges. So dollar index was doing that to the T. So we've been trading in a big range here, and then we've been trading in a tighter range within the bigger range for some time here. So we are now at the level of resistance that we have once hit before back in, what is this, April 27. And once we hit that level, we traded lower. So there's a possibility that this level can act as resistance. But in my head, you are getting some rate hike probabilities priced in for the dollar, right? So there's a potential that the dollar continues to benefit from that. And then you can see this level of 99.5 fail. And if we do get that, then perhaps dollar index trades back up to the upper level of 100.5. So that's something that I'm watching here, guys, as far as trading setups go. So don't want to enter prematurely on a dollar long position just because if the level of resistance does hold, then it's a loser, right? So I'd rather wait for the technical confirmation and then some more bullish readings on the EdgeFinder. So we're still seeing a little bit of neutrality when it comes to dollar pairs. So for example, the Aussie basket, which is a basket that I'm still trading in right now, it's still bullish. So I'm going to keep that holding. But you see like Euro US dollar getting a neutral reading. Let's see, dollar isolated is getting a bullish reading, but then you have things like where is it? Dollar yen's getting a neutral reading. Dollar CAD, which is one of my preferred ones, is getting a neutral reading. Pound dollar is getting neutral. Kiwi dollar is getting neutral. So again, I want to wait for two things. I want to wait for a technical confirmation to the upside in dollar and for an EdgeFinder confirmation. So that's what's on my horizon here for you guys today. So like always, if you guys have any chart markups, anything like that, feel free to drop those into the chat and I will do my best to go ahead and go over them. Simo, what's going on, man? What's up here? How you doing, Elvis? What's up to all the regulars here? Hope you guys had a great weekend. So as far as my current positioning goes, I'm still in the Aussie basket. So we actually did see some drawdown, not drawdown, a pullback, I would say Friday and Thursday as we were seeing some risk off environment. But we have now since found some support in the Aussie basket. So all these three are winning at the moment here. So Aussie Kiwi, Aussie Swiss, and Aussie CAD. Aussie CAD's doing most of the heavy lifting today. And I am still in dollar yen short here. But again, I do have a net positive swap, and this is a smaller trade. So I'm just going to hold on to this and see what happens here. But we are still in a big, trade or you can say consolidation level here with dollar yen. As far as new positions that I want to take, if I want to go long the dollar, I want to wait for a pullback in the euro. So again, this is another reason why I don't want to enter a trade prematurely here. So let's say my thesis is long dollar. We are at a support level for the euro. So there is a possibility that the dollar gets a little bit of a pullback. And so in that case, I would rather wait for a better price to go ahead and short the euro dollar. So I think this level here, right, this is a good level of support. So before this was resistance, you can see here to the left. And then we broke above it, and then this was support here. So we are now within that level of support. And so I would wait for a pullback into somewhere like 1.171, or preferably, I would really like 1.18. That's like my ultimate level there. It seems like this is a solid level of resistance. And if I put a Fibonacci retracement level from the low to, from the high to low, right here where this zone that I have here marked up in gray is the 61.8% retracement level. And you also have the 38.2 and the 50 lining up with those key moving averages. So I do think that a pullback into this level could be wise. Once we get the pullback into that level, of course, you have to revert to the EdgeFinder to see if it makes sense taking the trade or not. But from a technical level, that's kind of what I'm looking at. The other way I would like to introduce some long exposure into the dollar CAD or to the dollar would be via dollar CAD. I'm not in this trade, so this zone right here that you see is just a hypothetical. I was waiting for a pullback into this level, so I'm going to delete this one here just to make it easy on the eyes. But dollar CAD, this was a level of resistance here. We are popping above it. So if we get a pullback deeper into here, perhaps maybe the 20-day moving average or even this zone here, I would be willing to go ahead and go long dollar CAD because I do think that the dollar could have some room to go higher. Right now, it's getting a neutral reading of 3. And I was also looking at this before I went onto the stream here. And for anyone that is new to the stream, the tool that I use here, along with the other traders in this live stream, I do use the EdgeFinder a lot to give me a macro bias, to give me my macro trades, and also to filter out the bad ones. So I like Canadian dollar. It's getting a bearish reading here, so you can see that. And then if you look at the US dollar isolated as well, it's getting a bullish reading. So I like to see that, those two relationships, polar opposites there. So if I were to get a pullback in dollar CAD, I would like to take some long exposure here. That would be the trade that I'm looking at. But for now, I have to wait for an EdgeFinder confirmation and the technical pullback on dollar CAD. As of any other currencies, not looking to really trade anything else. The pound dollar too kind of makes sense for a short opportunity as well. So pull back into maybe the 200-day or even above here. I would prefer the upper level. So we'll go ahead and see. The pound's struggling with some political pressures at the moment right now. So they have a prime minister kind of thing going on over there, like a flash election type thing. And so that right there will go ahead and put some pressure on the pound and cap some upside. But then you also have, the pound data has actually gotten better from its previous time. So that's kind of what's going on with the pound. So I would prefer the euro dollar also too, because the euro has the biggest correlation to the DXY. So that's why I would trade the euro. But pound is also a very viable setup for those that are interested in either trading the euro or the pound to the short side. Pound is a good one as well. Me personally, my stats, I have some bad stats when I trade the pound, so I want to avoid that one. But it's definitely a possibility for those that like trading on the pound. Sup Sluggy, no worries. Yeah, I saw what you guys were putting up there in the Discord. I was actually laughing a little bit before I came on. CAD Swiss Schwartz. From my understanding, my friend, the Canadian dollar and the Swiss franc are both weak pairs at the moment, or weak currencies. Let's look at the EdgeFinder to see what we can see there. Maybe we can see something. Maybe you can introduce something fresh to me, because at the moment I'm kind of stuck on those. Let's see, CAD Swiss. Let me just type it in. Oh, it's actually getting a very bearish reading of -10. Okay, interesting. Very interesting. Let's remove this right here. Okay, CAD Swiss. Let's see. I think we got the pullback that we're probably looking for if you were to put a fib here. Okay, so we hit the 38.2, almost to the 50 there, close to those. So, okay, interesting. Getting a very bearish reading of -10. Okay, let's do this here. Let's go ahead and back test this idea on CAD Swiss reading. So we're going to go to EdgeFinder score history. We're going to go to proceed here. We're going to look for CAD Swiss. By the way, guys, this is a new tool here. I've been using this to verify the reading, because some currency pairs trade very, very differently, right? You have like a euro pound where it's like very mean reverting and choppy, and then you have other things like anything with the yen where you have the carry trade dynamic that pushes it higher and it trends higher, right? So I've been using this tool to kind of see how the reads do. So CAD Swiss. Okay, let's see. Bearish reading twice here. You had a good clean move lower. It seems like anything within here is solid level of support where the score tends to flip. Okay. So you've had some previous readings bullish when you get to this level of price, and that's pretty much where we are right now. So I probably wouldn't take this trade. So it's a very strong reading. Don't get me wrong. I would rather wait for a push higher into one of these upper levels where you got like these previous bearish readings that you had a clean move to the downside. So I would wait for more of a premium. So in my opinion, I like this level here. So if I just go to the actual chart itself, preferably if we can somehow get a pullback into somewhere like this, and you still have a strong reading to the bearish side on the CAD Swiss, I will go ahead and take that trade. But just because, let me articulate what I'm trying to say here, guys. You have seen some bullish readings here when price action is within these levels, which is where price is at right now. So this is like solid support here. So for me to answer this trade to the short side, I'm looking at previous bearish readings on CAD Swiss. You can see it was like towards these upper limits here and maybe even up to here. So I prefer to wait for a more premium level to go ahead and short CAD Swiss. I hope that made sense. And if you have some questions, or if you want to clarify that, feel free to say that into the chat. Tony said dollar CAD is a real move. Yeah, I would really want to wait for that. I think that's a clean setup there. It's been trading in this broader range here, but again, when dollar CAD starts to move, it starts to move in a straight line. You can see here previously, we actually broke out to this level. We had some stalling in this level of resistance, but then we had a clean move higher. So trying to look for the same characteristics here, straight move up pretty much. I want to see a pullback into this level here, see some support, and then we'll probably trade to the upside. But again, it has to make sense, right? We have to see what happens. Other thing that's probably going to really move the dollar, right? We do have FOMC meeting minutes on Wednesday. So I'm curious to see, how much internal pressure was there in the meeting minutes. Were there any members discussed about hiking? How the committee feels about perhaps Kevin Warsh, things like that. So that's kind of what I'm looking for as well on Wednesday. So it's very possible that you see a little bit of stalling out here in price action when it comes to currencies or other US related assets. And then after Wednesday or after the meeting minutes, when the markets have a little bit more clarity as to how the Fed is positioned, given the whole war in Iran and everything, then maybe you can see the real move. So for now, I'm going to hold on to my positions. They're doing well today, right? So we did have some pressure and risk on Thursday and Friday, but it has since recovered. So the Aussie basket still a good trade in my opinion. I still like the Aussie basket. I have positive swaps, so it doesn't hurt me at all to get out of those trades. And then I'm just going to wait for some more clarity on the dollar index. I like dollar CAD a lot, and I like euro dollar to the short side, but we'll see. Euro dollars at this level of support, so I don't want to enter prematurely. Cool. Marco, how you doing, man?
Hello, I'm doing pretty well. How are you?
Good afternoon. Doing pretty good.
Nice. I was just in the Discord, in the A1 Discord, and it's getting pretty active in there. We have a
I
new
saw.
guy that joined.
I was laughing before I got on here. So
yeah.
These guys are funny.
Yeah, we have a new guy that joined and that's claiming 6R. So when he makes a win, he gets, let's say, $600, but when he loses 100, and he claims a win rate of, I think, 30 to 40%. Well, if you put that in the Sharpe ratio, you would see that that sort of a strategy, those sort of statistics beat every single hedge fund in the world, beat Jim Simmons, beat Citadel, beat JP Morgan, and pretty much that's fake. So be careful out there, guys. Always, when someone mentions statistics, put it in a Sharpe ratio, and then you'll see how the Sharpe ratio compares to the best guys in this game, and you will see who is for real and who is actually inflating the numbers, and just doesn't basically know what they're doing. So yeah, just wanted to put that out there.
Yeah, maybe I can send him a wire transfer, and then we'll see. But
I mean, yeah, if he takes investments, I'll invest right now.
Also, guys, though, there's a free Discord channel as well. So for those that I know this is a newer thing. We used to have the Telegram as Free Valley, but you also have the Discord as well. So definitely feel free to go ahead and join that. And then you can talk with other traders and exchange ideas and have a great conversation. So the A1 Trading Discord is a net positive in my opinion. So I love it. Great conversations there all the time. So definitely go ahead and join. And of course, get yourself a copy of the EdgeFinder. It's definitely going to help your trading and improve it for a lot. But Marco, what are you looking at today? So Thursday and Friday, we had a big sell-off in risk. The ball market was selling off, so you had yields higher. And you're starting to see a little bit of a bid back in bonds. Yields are coming down just a little bit there, and so you're seeing some risk appetite today in the market. Does your view change? Anything new coming up here as the new week starts?
So Monday we're getting dovish again, bullish. I think we had some breaking news earlier that the Middle East conflict is going to improve. So if we go to financial juice, market moving, we can see Iran wants a long multi-stage truce, including a long-term nuclear freeze instead of a full dismantling. So this was great. And then you have US proposed temporary waiver on Iran oil sanctions. Again, very bullish for stocks, bearish for the dollar, and bearish for oil. Now, is this still confirmed? Is this going to happen 100%? Very uncertain. So I think this could be just a brief move, and then we continue with the overall theme. In my opinion, the overall theme is the dollar catches a bid, the inflation stays persistent, the Fed turns hawkish, and we get possibly rate hikes in the future. So I'm in these positions. I am in a gold long. I have sold euro dollar. Okay, and I'm in a small short on the Russell, which I didn't put out as a signal because I think it's pretty risky. But I want to participate briefly shorting the equities. And then what I'm looking for is buying the Nikkei. This is a good level. So if I decide to take a buy position, I will of course put a signal, and buying the NAS around 20 MA. So around 2,800, I think that's a good level as well. So that's kind of the top things I'm looking at. I think what happened today is just an outlier, that it's not going to continue. And I think this week is mostly going to be dollar goes up and equities sell off pretty much. And before I bring it back to you, I just want to say, if you guys want to participate in the DNA funded giveaway, so the first step is to join the free Discord. Okay, this is not it. Let me just put the free Discord. This is it. So fill out this form. You'll get entered into the A1 Trading free Discord. Then search for a channel called giveaways. In that channel, you will have another form where you can apply for the 5K one-phase DNA fund account. So yeah, I just wanted to mention that. What's your take, Alan? What positions are you running? What are you looking to take? And are you risk on or risk off for this week?
Yeah, so my positioning hasn't changed at all. And I am looking for, I agree with you there on the dollar viewpoint. I think that there's a case that the dollar continues going higher. We are at this level of resistance here. So I want to wait for a technical confirmation before getting into it, because you can either get a break and retest, or you can just wait for a better price lower. But I think I'm kind of leaning towards that direction as well. You do have yield sticky higher. The probabilities are pricing in rate hikes. So you have a lot of things going in that direction. So that's what's kind of pulling me there. I like euro dollar short as well, Marco. I'm going to wait for a pullback though, because we are at a level of support that has held pretty nicely before. So pull back into these key moving averages. This is the 20 and this is the 200-day. So anywhere within this cluster, this right here, this gray zone that I have on my chart, that's a 61.8. So ideally somewhere up there. But yeah, I kind of want to, proceed with that. And also like dollar CAD as well. Dollar CAD, you do have, if you look at the EdgeFinder, look at the asset scorecard, dollar CAD itself as a currency pair doesn't have a bullish reading yet. But looking at the US dollar isolated, basically looking at like the futures chart, for example, you can see US dollar getting a bullish reading and then the Canadian dollar getting a bearish reading. So I do like those polar opposites there. And previously in the past, you've had dollar CAD, hit this level of support, this general area here, which we just did here recently on April 30th. But you had like a mean run up, clean straight move up higher. Then you have some kind of a stall in this level of resistance where, support or buyers get accumulated. And then you have another leg continued higher. So I think we are in another stage where you have a possibility where we kind of stall out here in dollar CAD. Perhaps you get some buyers accumulate, and then I'm going to target the next level higher.
Okay, I love it. I love it. So you're looking for a pullback on dollar CAD.
Dollar CAD and euro dollar as well, yeah.
Okay. I actually love dollar CAD. I like the Aussie CAD as well. But what my plan is, I think tomorrow we get inflation print for Canada. And I think that turns out to be hot. And I think the CAD catches a bit of a bid on the news tomorrow. So if you can just check, I think, so CPI, I think it prints hot. I think the CAD gains a bit of value, and then that actually may give us an opportunity to get in on dollar CAD longs and Aussie CAD longs, because Aussie CAD is pretty close to a good level, but I would need a bit of a correction. So I think tomorrow after the inflation, if we can set a buy limit, that makes sense. What do you think about that?
Yeah, so inflation previously was 2.4% and is looking to pick up to 3.1. Let's go ahead and look at the EdgeFinder here, look at the economic data. Let's look at the inflation story for Canada. Let's see here. So they're around their 2% target. So a big drop here wouldn't be as significant as what you have seen there in the US, right? CPI for the US is at 3.8 and PPI is at 6%. So relative to the US, comparing the two, the inflation pressure in Canada isn't as great as you would say in the US. So you do have that going for it. So I agree with you, Marco, that if you were to get a hotter CPI print in Canada, you do get a little bit of a short-term boost there that can present a pullback opportunity and then go long dollar CAD. Looking at the US, for example, it's a different story. We were trending towards our 2% target inflation rate, and now we took a U-turn, and we are now going the opposite direction, and we're actually pretty elevated. I think it's the highest in 3 years or so. I could be wrong there, but I think it's 2023. But nonetheless, the inflation story in the US is a big greater than in Canada. So yeah, I love dollar CAD. I like that idea a lot too.
And what do you think about this? So Waller, Fed member, the most dovish Fed member there is, right? He's just persistently voting for rate cuts. Well, he's speaking, I think, either this week or the next week. And if you get the most dovish Fed member to turn hawkish, so Fed Waller speaks May 19th. That's Tuesday. That's tomorrow.
Tomorrow, yeah.
Yep. So if you get the most dovish Fed member to turn a bit hawkish, could that be the confirmation we need to just go heavy on the dollar?
I don't know. So I think that markets, like, I think the base case, like the most, let me say, like, I think the most dovish case is that rates stay steady. I don't think there's rate cuts.
Okay.
I remember the last FOMC conference, Powell's last one, is that there needs to be two things that happen. One, they need to let the tariff pressures pass through entirely. And then also now the war in Iran, price of oil pressures, pass through as well. And they still haven't even seen the back end of the tariff pressures pass through. So you still have to allow that to pass. And then now the oil conflict, or the oil price. So I think base case, you do get rates just stay steady where they're at right now, which can support the dollar. If you were to get one more, or if you were to get a super dove kind of pivot into hawkish camp, will that change a lot? I think so. You still have Powell on the board, right? That's still a vote. And then you lose that dovish person. I think it's going to be really hard for wars to influence a rate cut. So yeah.
Yeah, my thinking with that is I'm gonna see what the speech from Waller is tomorrow, but he's basically installed by Trump. I think he was put in the Fed by Trump, and if you get the most dovish person to capitulate on his view, that could be a nice confirmation. But with that catalyst, we also have the U.S. exceptionalism, which basically means people from all over the world buying U.S. stocks, wanting to participate in the artificial intelligence race. And if you actually look at things like S&P compared to the DAX, or the S&P compared to the FTSE, or the Nasdaq compared to the DAX, Nasdaq compared to the FTSE, you will see massive recent outperformance of the Nasdaq compared to pretty much every single other index. That means money is flowing out of the UK, out of Europe, maybe even out of Japan into the US. And that basically means all of those currencies are getting devalued while the dollar is catching a bid. So essentially two massive catalysts: US exceptionalism plus possibly a more hawkish Fed than people expect. And I think that could be the start of a massive uptrend on the DXY. And if we get it right, it could be possibly even the trade of the year, let's say.
Yeah. Just because, like, now if rates hike a lot, if rates increase a lot, then yes, that hurts equities. But there's actually like a sweet spot when it comes to equities, right? 1.5 to 3.5 to like maybe 4, you can say, is a really good spot for growth. So even if the base case happens, which is rates stay steady, that's actually a pretty good catalyst for equities. It's still a good growth environment. And then, like you mentioned, that U.S. exception, whatever that word is, English second language.
I'm having trouble with it as well.
Yeah. Right, that goes on. The U.S. benefits from the relative higher yield compared to its peers. So there's definitely that going around. I wanted to talk about the pound, because I know the pound dollar short is also a very viable idea. I prefer not to, just because of my personal statistics and my personal experiences with the pound. But people are in the chat are saying, thoughts on pound dollar. Here, I have pound Swiss here pulled up for you as well here. It's getting a bearish reading of -6 on the EdgeFinder. So it seems like the pound short idea seems okay. To answer your question there, Kier, pound Swiss, I would wait for a pullback into a level of like maybe 1.0600. You are getting a little bit of a lift in the pound dollar, and I do think that you get more of a pullback opportunity in pound Swiss. So I would be patient on that. But Marco, on a broader pound view, it's getting a bigger lift here compared to the euro today. Would you add this to your basket of long dollar exposure?
Absolutely. I wouldn't add it because I do prefer EU and I do prefer USD CAD, if I'm being honest. But if I wasn't in those positions or considering to take those positions, I would look at GU as well. I mean, GU producing horrible economic data. I mean, not horrible, but pretty bad. You have a political turmoil. You have the Comrade Kier not wanting to step down, and just the PMs have been completely unsuccessful. But yeah, as Max says, the pound is a bit more difficult than things like, let's say, euro and CAD, because CAD Sluggy, a member from the A1 Discord, sent me a nice screenshot of the economic data in Canada. It continues to underperform. So if you make a cumulative index of all of the economic data in Canada, it basically from the start of this year continued to underperform, making the CAD super weak. That's why I think the situation is a bit more clear on things like the CAD and Euro. That's why I prefer taking trades on those. So I'm already running a sell on EU, and I would rather buy USD CAD than sell GU, if that makes sense, right?
Yeah, me too. 100%, 100%.
And I also wanted to mention with the S&P, what I want to say. In 2022, I think you had actually rate hikes and the stock market just went up. I think that was the case. I'm going to have to double check. But even if we get rate hikes, it shouldn't really be super bearish if it follows the growth. So if the rate hikes follow the massive growth, they could just be following the economy and basically... Okay, so we had a massive crash in 22, but then when did they start to hike? I'm not sure. I'm going to have to double check that. But I think there was a period where the Fed was hawkish and the stock market actually continued to rally, which could happen again. And I think with artificial intelligence, it could be the next .com bubble. And that was huge. So that was huge. And that just went on and on and on until it finally pulled back in the end and then had a massive crash, of course.
Yeah, I do think that you have like you said, like the possibility for that perfect environment, but also I just like personally, no, I agree with that 100%, but just the market trading where it's at right now, I would wait for a bigger pullback. So like ideally, right?
Yeah, right now.
If the bond market spooks the stock market again, a bigger pullback, and then ride that wave as well. But for now, like it's just too tricky, man. Like I would not touch this. I would not advise anyone to touch the stock market. If you have a fresh position up here, that is a very, very scary thing to do.
Yeah, I absolutely agree. Short term, I'm bearish. So short term, I have that small sell on the Russell. The reason I picked the Russell is the Russell is not exposed to AI as much as the Nasdaq and the S&P. But yeah, it's just a small feeler position, which means if we do drop, I'll be looking for buys. So I'm looking for a better entry price. I think right now we're overextended and the markets are just too bullish. So that means we could get a bit of a correction, but overall the direction in 2026, in my opinion, is up. And I think we finish 26 at all-time highs. I think S&P maybe 8K. What do you think?
I want to say the stock market's going to end the year positive, but I'm not going to say overly positive. I think it's going to be like a very low percentage year, but I think it's going to be positive nonetheless.
Nice. Interesting. Yeah, could be. Absolutely. And if the Fed goes aggressively hawkish, yeah.
But all right, man, I'll go ahead and pivot out here so you can do your portion of the segment and then do the giveaway challenge as well. Gio, you asked this question here. I thought I had it behind me, but I don't. I guess I moved it to another bookshelf. But Day Trading and Swing Trading the Currency Market by Kathy Lean is a really phenomenal book. She was the youngest FX trader at JP Morgan, and it's a good book that blends technicals and also macro fundamentals, and it also has some very well-known fundamental like strategies surrounding macro. So go ahead and check out that book by Kathy Lean. I love that book. But all right, Marco, I'll go ahead and pivot out here, man. Thanks.
Sure. See you tomorrow. Goodbye.
All right, peace.
So let's post the link to the free Discord one more time. If you want to participate in the DNA funded giveaway, let me just copy this. So in the comments, you'll find the jot form. You need to fill it out. Then you'll enter the free A1 Discord. And then you need to find a channel called giveaways. Okay. Now the channel called giveaways has another form which you fill out and then you get entered into the giveaway. It's going to be a 5K one phase DNA fund account. And by the way, if you want to take on a challenge and you want to get a good, reliable prop firm and you want to get a good price as well, DNA funded is a great option. So I'm personally using them. This is my 25K two-phase fund account. And no, it's not been given to me by DNA. I actually paid for this. I also paid for the last one, which I passed. So past phase one, 50K. Past phase two, 50K. Then unfortunately blew the funded stage. And now I'm on to the new funded account, past phase 1, past phase 2, funded stage, trying to get a payout. I have a sell on pound Swiss, sell on gold euro, sell on the S&P. So this is heavily positioned risk off. And this is purely traded by ChatGPT. So I have this running in the background. It's mostly for my YouTube series that I'm doing. But again, if I make something on the account, it definitely helps me personally as well. So if you want to get funded, I've had a great experience so far. And the code A1 Live gets you 25% off any DNA funded challenge. Okay, so A1 Live, 25% off any DNA funded challenge. To run through the watch list quickly, we had the news. We had some breaking news there on Financial Juice. Personally, I stopped following breaking news. I stopped making my trading decisions according to breaking news a couple of weeks ago, because you can never know what Trump is thinking. You can never know exactly what Iran is thinking. The Strait of Hormuz is still closed. Yes, you get some chatter here and there, but actual improvement, it's not happening. So I'm trying to focus on economic data until the economic data changes. That's why I think we had a short-term sell-off on the dollar, rally in stocks, sell-off on oil. But long-term, I think dollar goes up. I mean long-term. This week, let's say this week, I think dollar goes up, stocks go down. Oil, I'm not sure. Oil stays elevated. Let's say it like that. So oil stays at higher levels. So to run through the watch list once again, I have a position on gold. It's a buy position. I'm in 2 entries. So cumulative risk is 1%. First entry is at 4727. Second entry is at 4581. I think this is a short-term bottom. I think we could rally from this point. I think we could hit 5.4K by the end of this year. I think so. Or in the next few months. So I want to be positioned for that. I have a sell on euro dollar, which so far is working pretty well. I'm really happy with it. It's my favorite position right now. Buying the dollar is essentially my favorite position. I'm looking for entries on the Nikkei, but as I mentioned, for this week, I'm bearish equities. So I don't want to go in just yet. And then NAS, I'm looking for a bigger correction. So for the Nikkei, I actually like this level. I think 60K is a good level to buy. I think that is nice. But again, waiting for this week, then I'm going to reevaluate. But for Nasdaq, I want to see a bigger pullback. I want to see 2,800, maybe go even lower, maybe even 2,600. I mean, that would be perfect. If we get 2,600, I mean, I would go in with a short-term trade. I would buy some Nasdaq or the S&P as a longer-term position. That would be a great day if we can get that. Also, be careful if you're a buyer. Don't catch a falling knife. If you get a huge red candle on the daily chart, stay away. And yeah, don't be a sucker. Don't buy all-time highs. Don't buy into falling knives. And actually buy at good levels. I think the NAS is not bullish here. Let me see. Nasdaq neutral, but the Nikkei is bullish. So the Nikkei neutral now as well. Interesting. I'm gonna have to wait for readings to flip to bullish as well. One thing I'm adding is Aussie CAD. Okay, so Aussie CAD. I want to get in. Aussie CAD, but I'm looking to see, or I'm waiting to see the inflation print tomorrow. So 19th of May, 1430, because I think Aussie CAD could drop a bit more because the inflation should print hot. Okay, so inflation prints hot tomorrow. Let's say that's my guess. That's my prediction. And then I can get in at a better level. I can get in a bit lower. EdgeFinder is bullish, so that's always nice. On most of my positions, I prefer to go with the EdgeFinder. So that is bullish. I just don't want to buy before the inflation print, because there's a very, very high chance it prints hot. And a hotter print is bullish for the underlying currency, right? So tomorrow, Aussie CAD could sell off a little bit more, and then I can get an even better entry. Okay. So let's do the giveaway now. Let me check all of the entries. So today is the 18th of May. 18th of May. Okay. So let's grab all of the names, copy the names, put them in the wheel, spin, and let's see. So, Carlos K, congrats on being the winner. I have your contact information, and after my segment ends, I will send you the code for a free 5K one-phase account. So, congrats. I just want to repeat, if you want to get funded, we have a code A1 Live that gets you 25% off any DNA funded challenge. Okay. It's a good prop firm. There's a big broker behind them. I've had a great experience so far. Their support is fast to respond, polite, and they know how to take care, or how to basically resolve any issues. So that's really important for prop firms. I mean, if you ever did prop firms, you would know that you need a good support team. If you don't have a good support team, there's always something. Either the spreads are bad, or you get executed at the wrong price, or the market opens too late or too early. There's always something, because it's the financial markets. So you need a good support team behind the prop firm to help you resolve any issues. Okay, or maybe you can't log in. You know, I've been doing this for a while, and there's always something with every single prop firm. You have technical difficulties. It's normal, but if you have a good support team, it gets handled quickly and on time and with quality. So we covered the watch list. We covered the giveaway. Let's see, just the NAS. Okay, what about the Russell? What about IVM? Let's see. Okay, this is good. This is good. Go down, Russell. Yes, yes, yes. So this is my small position that I'm running. Anyway, comments. The indices are rising despite the war because global M2 is continuously increasing. Well, yes. I mean, look, this is the next dot-com bubble. Do you remember the dot-com bubble? I don't. I was 2 years old back then, but I've read about it and I know what it is. It was revolutionary technology being implemented all over the world. And the way to participate was to buy into US tech stocks, right? Do we have it here? I don't think we do. Yeah, we don't have that much data, but this is the next dot-com bubble. Artificial intelligence is here to stay. It is revolutionary. It is going to change the way that people work. It's not the holy grail, but it's going to cause a massive explosion in the Nasdaq. And then, of course, we're going to have a massive correction. So this is going to happen pretty much. Okay? And if you can participate in the uptrend, you can get out before the crash happens. And you can also participate in the crash. My game plan, keep buying, wait for the crash, and then be a seller or stay in cash and pick it up while it's cheap. So we're going to go back to some much, much cheaper levels. But I don't think this is the top. I think we have a long way to go. And I think you could I'm not going to say easily make money, but it's pretty simple to make money. Let's put it that way. Ballout says breaking again. I'm not sure what is breaking. Hey, Marco Sawyer, second gold trade. What do you think of tomorrow's talk from Warsh? How hard would it affect the gold price? I'm going to have to look into that. I didn't know that Warsh was speaking tomorrow. Do I have it on my little calendar here? No. Okay, so I'm going to have to look into that. I'm mostly looking at what Waller says, because Waller is a Fed member. He was put there by Trump. He's a Trump puppet, and he is just supposed to call for rate cuts all the time. But if the most dovish guy in the Fed flips hawkish, starts talking about inflation, well, then you know that it's going to be very hawkish for the whole market. Okay, that should give you the first indication that we're starting to flip to hawkish. So that's your edge. basically our edge here, or my edge, is listening to Waller speaking tomorrow, seeing if Waller turns hawkish, and then loading up on more dollar long positions if he does sound hawkish. That's the game plan. And the name of the game is to forecast something or to understand something before most of the world has understood it, and to act on it before everyone else. Hey Marco, just curious, why is your stop loss not at 4,000? Let's take a look at that. Gold. Let's see. Well, that is a good point. And I am known as the big stop loss guy, but I think a stop loss at 4K would be just too big. And I'm betting on a triangle. So I'm betting that there is a triangle pattern here and that it's going to break out up or down. If it breaks lower, it's probably going to continue. So do I want to wait for 4K? No. But I'm betting it breaks out to the upside. That's the game plan here. So I don't want to run an extremely big stop loss. I know I'm the big stop loss guy, but I'm not going to do it this time. So I'll keep a bit of a smaller stop than usual. GJ, yeah, I can look at GJ, and that's going to be the last thing for today because you have Tiger coming on after me. So GBP JPY, let's take a look. GBP JPY. The pound, kind of unclear to me. I want to stay away. And then the yen, guess what? It's unclear as well. Interventions, we got some interventions there. The BOJ, the MOF are still pretty active. They're still looking to intervene. We are approaching the crucial level of 160. Personally, I would not touch GBP JPY at the moment. I think it's just too uncertain. I think the pound is uncertain. I think the yen is uncertain. I think there is better, more simple things to trade out there. Okay, I'm talking about buying the dollar. I'm talking about buying stocks on pullbacks. I'm talking about buying gold. I'm talking about, yeah, that's it. Okay, that's pretty much it. CAD, yeah, selling the CAD. So thank you very much for watching. If you want to participate in more giveaways, I'll be streaming every single day this week. I wish you a great week great day and a great week in the markets. Don't go anywhere because you have Tiger coming on right after me. That's it. See you.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Monday. I'm struggle busting over here, but I'm going to make it. I had my 18 holes of golf on Saturday. We had a party bus. We had all the shenanigans, guys, for our bachelor party. And yeah, there's a reason I don't do that nonsense anymore, because I feel terrible for about 2 days, but it's okay. I'm going to be careful on the charts till I get all my wits back together. So that's me today. Might as well be transparent about it up front, right? So anyway, welcome to Monday. Obviously, we did have some headlines come out. I know they had touched on it earlier today. I just asked Grok to simplify it for me because we did have a few headlines come out covering. Oh, I'm clicking on the wrong one. No wonder. As far as the headlines out of Iran. So this is basically what it boils down to in about a paragraph. Iranian media, this is Tasnim. This is one of their agents, one of their news reporting agencies there, obviously reported that the U.S. has proposed a temporary waiver on Iran oil sanctions as part of the negotiations. Separate leaks, and these are the keywords leaks, to Al Arabiya cite Iranian proposals for a multi-stage truce, which is partly why we saw our risk on move here a little while ago, and we'll take another look, get updated on it, for the gradual and safe reopening of the Strait of Hormuz and a long-term nuclear freeze versus full dismantlement and enriched uranium transfer to Russia. So I thought that was interesting. They basically said, screw you, U.S., we'll send it to Russia instead. So the question is, can they be trusted with it? But the important caveat is that these reports are primarily from Iranian sources. The U.S. has not confirmed the waiver or details of the proposals. Past similar leaks have been walked back or disputed. So, yeah, and I've made quite a, well, on my other projects, I've made quite a few shorts on that. You get one side saying one thing, you get the market to spike thinking that it's the gospel, only for the other side to come out and dispute it. So it's just basically back to that same spot, guys. We just got to be careful. We got to wait for confirmation on both sides. We got to be careful with the legacy news medias. We all know, love them or hate them, we all know that they've all got agendas. They're trying to get clicks. And quite a few times over the duration of this Middle East conflict and ceasefire and everything, a lot of the stuff's had to get walked back. So just be careful with that today. Let's first hear it from the horse's mouth, being the U.S. administration, obviously President Trump or Marco Rubio or whomever, before we can really trust that. Because as you can tell, the markets are just amped and ready to go. They're looking for anything positive to be able to turn this thing back risk on. But a lot of them are front running it, and then they're getting railroaded at the end when the other side offsets it. So just be careful with that. Geopolitics is crazy and abnormal right now. So anyway, we'll check some assets out on that note. Yeah, risk on sentiment in play, but volatility remains high. Stay tuned for official updates. So that's basically where we're at, ladies and gents. I just wanted to take a 30,000-foot view over here, see what we got going on. And if you guys have any tickers, let me know. As always, Nick does have his code for Ola Prime. If you're looking for a 35% off code, A1 Live is the code if you manually punch it in, olaprime.com. Otherwise, you do have the QR code on screen there. I pointed to my screen like you guys can see my screen over here. But so definitely go check that out if you guys are interested in checking out a new prop firm. Okay, so yeah, having a look at the VIX. So we've been basically, I kind of drew this box up a week or two ago, something like that. We've basically just been going sideways between this, 17 to almost 20 area, but we've stayed under 20 for a while, outside of peaking ahead of it a time or two over here. And again, just pretty well clustering sideways overall. 1869 as we speak right now. We did have a little bit of decline on the Dixie when those news items started coming out this morning. Okay, so dollar down, dollar being the safe haven play. Obviously, that was good news, even whether it's true or not. So that's some money out of the safe havens, potentially into the risk on assets. As far as the futures market goes, which I was taking a look at earlier, yeah, you had the spikes up on that news. But again, kind of retracing itself now. This has happened so many times where we get a spike up from good news only for it to retrace or get debunked. So just be careful with this stuff. And it's interesting taking a look at the EdgeFinder that we got Bitcoin on the bearish list. How about that? Now, I think there's, before I start trusting an actual down move over here, guys, I really need to see kind of a lower high form, because if we go to Bitcoin and just go back to my 2-chart look briefly here, it's still technically in an uptrend. I mean, you got higher highs and higher lows. Now, this is our more recent low on a daily, and obviously your higher high. But so far, we haven't had a lower low yet. We just haven't done that. So And I kind of drew it up this morning, but for me to really be excited about that EdgeFinder call, well, I really need to see a break of structure, close, and then a retracement, kind of like what I've already drawn here. So let me just go to back to a one chart look so you guys can see that a little easier. And this is just the way I see it, right? Not saying I'm right or wrong, but I would feel more comfortable about trusting it, that bearish look, if we get a breakdown and close below this 1 hour demand zone, which was the same demand zone I was looking at this whole price period back over here for possible buys. So, you know, now, and this is where it's good to have, you know, for me, supply and demand zones at all times on here, just so that I could see, A, hey, if I'm going to buy from it, great, there it is. But B, will that come into fruition if we kind of flip the trend to the opposite side? So I really need to see a break of that 1 hour zone over here for my taste, and then a retracement back up for a premium, you know, supply zone to be shorting in at that point. But I just don't feel comfortable personally shorting when we haven't really truly broken a higher time frame swing low yet. Okay, so again, that's just the way I see it. Obviously, the picture's a little different if you're a scalper or a short-term intraday trader. Then obviously you're in a downtrend. But I'm more so looking at it from the daily, which is, you know, even if you keep going out, I mean, this more recent uptrend could just be nothing more than a retracement from the higher time frame weekly. Okay, we're on the weekly chart. We've got a breakdown, broken the swing low. Okay, so typically the higher the time frame you go, the more accurate the picture gets. And we've got the lower high. You could make an argument that this is a new low point, a new high. I should say a lower high. A base drop on a weekly time frame. So, you know, there's really two ways that I would have interest in. Number one, if we get a retracement on a weekly, okay, there's a weekly supply zone right there. And then obviously drop it down to a daily to see if there's anything else on this time frame. Let's go back to a weekly real quick. Oh, okay. And then obviously here's our weekly. So within the weekly, we can find a daily, which I've kind of got one at the bottom. So that's a possibility. Just get a much higher premium price pullback. And actually, I need to color this orange. I got my color schemes in my head, guys. I have my weeklies and monthlies orange. I got my dailies yellow. And then I got my 4 hour and below red or green, depending on if it's supply or demand. That's just the way it makes sense in my head. But that's one possibility. Just get a really high premium spot to short this thing, because that's a pretty good looking zone right here on a daily with a lot of volume spread analysis activity. Look at that. See, that's a pretty picture right there if we get a retracement up. Otherwise, again, the only other option I'd be interested in is if we can break down below this, you know, these swing lows on a 4 hour and then retrace. So there's really a couple options. It just depends on which way price wants to go, down or up. And so far it looks like it's trying to roll over, but we still haven't broken the higher low, in my opinion, guys. So anyway, that's a look on Bitcoin there. Just thought I would kind of lead off with that because we rarely get Bitcoin on our bearish list, right? I've only seen it on there, I don't know, maybe 2 or 3 times since I've had the EdgeFinder, 2 or 3 times to the bearish side in a year. So, but again, I need more information. Okay. We say it all the time, need more information. So I'm going to sit on my hands with Bitcoin in the meantime. As far as, yeah, I'm still in that meta trade. This thing's starting to get annoying. So I'm just going to leave it open. I still maintain we should have a chance of getting up there. But yeah, nothing really to report on that. Still got all the Aussie pairs up there, man. They're up there. Now, one thing I did think was interesting, if we go back over to the surprise index, we had quite the movement on the Swiss franc. It's now taken over Japan for the 3rd spot as far as the fundamentally strongest currencies up here. Euro and pound, bar none, they're head and shoulders above everybody. But the Swissy came back from the dead because this thing was down in the 40s at one point. Now we're all the way up to 85%. Well, why is that? Well, last week we had a positive GDP and a positive PPI number. So you're now to the point where there's only one bearish item, and that's the retail sales, which is a big one, but it's been outweighed by 6 bullish reports. So yeah, the Swiss franc all of a sudden has some strength from a fundamental perspective. So, just kind of going back to the list over here, trying not to lose my voice on you. Going back to the list over here, those are the top 3, but yeah, we've got the dollar down there at the bottom spot. So that's that 40%. Canada right close to it. So the dollar all of a sudden is the weakest currency right now from a fundamental perspective after being near the top for quite a while. So, it just goes to show that the market again really wants positive news. Any little headline like we've had today, we've had 2 or 3 of them. Hey, the market's running with it as a risk on move. Again, we need it confirmed first, but it just goes to show the markets in a lot of ways don't care. They're running on every positive headline to turn it risk on, only for it to get swayed. So hopefully this time it's true. Hopefully President Trump hops on his Truth Social posting over here at some point and talks about it, confirms it. But right now he's just talking still negative about about it. This was his post from 9:40 my time. So that'd been about 20 minutes ago, actually. Just more trashing on the fact they don't have a Navy, they don't have an Air Force, talking about Iran over there. So I don't know. You tell me, does this sound very positive? Does this sound like a positive response to these Iran headlines we're getting right now? I don't know. And, not to mention all the fake news trash and everything he's talking over here, Democrats, this and that. So just be careful. That's all I'm saying. As soon as I saw those headlines, I'm like, I don't trust it. Not till he confirms it or Marco Rubio or somebody. But anyway, I'm off of that soapbox. As far as items I'm looking at today, guys, I've already had an alert hit. Let me see. I had pound Aussie hit. So pound Aussie, which I do believe was at one point giving us a bearish look, and it looks like it's changed. So it looks like pound Aussie has fallen off the list now. Down to a -4, or I should say up to a -4. It was -5 or lower. So bearish look on the fundamental side. Just not really getting any help out of the smart money, dumb money combination, and a little bit of a bearish look on the technicals. So we just basically need one more piece of, hey, again, it's hard to short an asset that's 100% on that list we just looked at. But if we're just sticking with the technicals for a moment, I do at least want to say it's nice. It is interesting to see that we broke through these strong zones of demand from back here in the past. Talking about these zones of demand all the way back here from January of 2024. Okay. We had already bounced into it once, and we got that push off, which is to be expected. Higher time frame zone, unfilled orders, strong push up, and now it's retraced and went through. So now at this point, it looks like the bearish trend is intact because we got to close below the remnants of this zone of demand, this combination of zones, this confluence. So now the question is, how can we short this thing? Well, if we're just looking at the technicals only, I like the fact that my 8 EMA has pushed to the downside. Okay. The 8, which is the dark red, is below the 21, which is the light red. We're obviously getting a retracement, but it also looks like the alligator's mouth is trying to close a little bit. Okay. So that's a little bit of hesitation there on shorting it if I'm just isolating the technical side of things. And then just going back to the one chart look to look at our 4 hour. We had one zone down here on a 1 hour that you got a little bit of reaction, not enough to say that was a profitable trade. That would have been about a 1-to-1. That's not going to cut it. And currently we are in a 1 hour zone as we speak. Now, it feels like that might be a little thinner of a zone that I like personally. I like zones that's a little bigger than about, what was that, about 15, 16 pips. That's just not cutting it. I do like that it's bouncing into the 200 as we speak. So basically, when it comes to this play, again, it's fallen off the EdgeFinder, but had it been still giving us a bearish look, I would have been a little perturbed about selling a pound, which is 100% on our list. The Aussie part of it makes sense because the Aussie still does have some strength going on. It's just the whole pound idea that's throwing me off personally. So let me just Aussie Yeah, see, Aussie's actually gotten a little bit less strong. So it's a 67%. But again, the pound, this right here is my hang up, guys. That's my hang up right there. Shorting something that's giving us 100%. Okay. Now, again, there's technicals. There's sentiment that goes into this, 3 analysis algorithm, if you will. But I already don't like it when the top asset or the top analysis group, in my opinion, is giving us that strong of a look. So basically, just to summarize this, if I get a bearish 1-hour candle, if somehow it comes back onto the list bearish, then I would have to see a bearish 1-hour candle form with some volume spread analysis picking up, or bearish engulfing candle. Okay. But right now it's just a wash. Got to just let it go, even though it's in a zone. So technically looking okay, but when you add everything else in, it's just not quite there. It's just not quite there for me. And I got about 10 minutes left, guys. So if you have any tickers, anybody got any tickers out there, let me know. We'll take a look at CAD Swiss, which has given us our most bearish look. Okay, CAD Swiss. I don't even think I have an alert on that one. CAD Swiss. Where you at? I got so many assets on here, sometimes it takes a minute to find them. As always, oops, I didn't mean to do that. All right, so 8 is below 21. Here's my hang up with CAD Swiss. Okay, we have a daily supply up here, which is basically 3 days of basing action. We had a really good expanded range candle coming out, but we really didn't have the volume to back it up. And we did not even break a structure, a major structure. So that's going to be my hang up on this. I really need to see a breakdown of this zone, swing low down here for me to have really any interest, because even just looking at that on a daily, what do you see? You see equal highs and you see equal lows for the most part, pretty well sideways if you just want to zoom out and look at it that way. So it need a breakdown of this swing low to really be excited about a short. So that means it has to drop, right? It's got to drop first. Got to drop and then give me a retracement up. I need lower lows and lower highs, and I just don't feel comfortable with the picture at the moment. Okay, so definitely going to pass on CAD Swiss shorts, even though it is the strongest look right now, and see if we can't find something else. Let's look at a couple of these others. Pound Swiss and CAD Yen, Pound Swiss. Okay, so this is a good looking picture. I like this. Broken a structure, a major structure on our daily chart. We got a supply zone right here. Within that supply zone, depending on which time frame you want to look at, it could look better. What I would probably do is look at this couple days of price action as just like one fair value area. Might even just look ahead of it, because if we look a little higher, we got a 4-hour zone hiding up here on the other side of the daily. So perhaps the daily could slow it down. Keep this strong push up. I'm fine with that. We start getting into the daily, see if we get some unfilled order potential in here and slow things down, and just give me one final up thrust, ladies and gents. That's probably what I would ask for. Okay, start slowing down up in this area, and then we get a new low, and then like your final up thrust into the supply zone ahead for that move down. That's probably something I would be interested in if we could get a move, something like this. But again, to me, this just feels like too many days in a row to where if I'm a big bank or an institution, I'm trying to distribute my inventory. Okay. Add a second distribution to it because you're basically on a downtrend anyway. Then that might be plenty of days to get my orders taken care of. A couple days. So this is an idea, but my guess would be, or my speculation, because at the end of the day, that's what we are, right? Speculators. My speculation would be the daily would slow things down and then just give me that one final up thrust into a zone that is a little skinny. It also didn't really break a structure on itself, but it is getting a bearish look. It's got to turn around somewhere, right? Well, no, not necessarily. But if I'm going to stick to the EdgeFinder, which has given us a bearish look, that's probably about the best I can come up with, because otherwise there's just a lot of wicks. there's just a lot of bodies and wicks everywhere. It's kind of tough to find. So that's just the best picture I could come up with right there on that pound Swiss. Euro Aussie, says Tony. Tony Trustworth. Yeah, let's look at Euro Aussie for you, buddy. All right. Not giving us a bullish or bearish look. Euro Aussie is giving us a neutral. So you got just barely a point of fundamental strength for the euro over the Aussie. Now the euro is one of them that's 100%, and we just saw the Aussie at 67%. So I would say the euro is definitely stronger, but it has to do with the breakdown of the different high-impact economic calendar events. And when you sift and sort, pull out the math on that, gives you 1 point of strength. The sentiment, on the other hand, is giving you 1 point of negative or 1 point of bearish look to it. Same thing with the technicals. So just it's two awash in my opinion. But let's go see what the technicals tell us for the Euro Aussie for you. Euro Aussie, Euro Aussie, Euro Aussie. Okay, got a nice good looking downtrend. 8's below our 21. We broke structure over here to the left, major structure. And we might have closed. It was close enough. We closed down here and we peaked a little lower. So, hey, bearish look or bearish trend looking all right to me. Yeah, this was that supply zone I drew up from May 5th, Cinco de Mayo. This is a pretty picture, and we're not that far away from it. It's just too bad that it fell off the bearish list because otherwise this zone gave us, 6 green red candles in a row. We broke this structure to the downside. So it tells me we got some underlying strength up there in the premium area. And I've already drawn the picture up. That's basically what I would want to see if we had, if it was back on the bearish list, but it's not. 50 EMA is below my 200 EMA. And it just so happens that by the time price does come up into that area, okay, our EMA is going to be down in this area somewhere. So it's going to have to poke through it. I like everything about it. I just dislike the fact I'm trying to short another asset that's giving me 100% on the surprise score. So that's just something to watch out for as well. The Aussie, while it is strong, is not near as strong as the euro. Okay. So just taking a quick look at the euro just as a refresher. You do have a few more neutral readings over here, which again is a wash or priced in, however you want to look at it. We really only care about the ones that either beat or miss expectations. So they're 4 for 4 in that avenue on the bullish side. So it's just a little bit sketchy. They're getting a little bit higher inflation, just like we are here in the States, which is good for their currency, the euro. And then obviously there's PMI data. Retail sales had some good numbers as well. So, it's not like they're 7 for 7. Okay. They're 4 for 4, but again, you had some neutral ratings. So I don't know. I don't know that I would want to, I have a hard time shorting a strong currency like this. Okay. But yeah, just to finish the technical side, that picture right there. I mean, I love that picture. The other thing I like about this picture is you got some liquidity hanging out right here from these shorts, these bears that had the strength to push price down and break that structure. Okay, their stop losses are going to be up here in this general area, just ahead, just below that zone of demand. So I love almost everything about this, almost everything except shorting a strong currency. So hopefully that makes sense. But yeah, my alert is going to remain just in case anything changes. Right there at the 163.20, 163 and a quarter level, call it 163.25. What else we got up here? Gold SP. Yeah, let's take a look. Gold. I've been pretty bored with gold and silver lately. We had that fair market value for about a week and a half up here. We finally had a spot where supply exceeded demand and it pushed us down. And it broke a new structure. So technically, it did leave us a supply zone. But again, that supply zone is where? It's in a fair market value. Okay, where buyers and sellers agreed on price. So I would be careful about that. Not saying I wouldn't short this, but I would definitely not be putting on a full position. Probably, I personally would probably take off half the position if I thought that was a short. But I have no rating on gold and silver right now. at all, but I would be interested to see what happens here. If we get a push higher, we've obviously got a stronger supply zone at the top, more of a higher time frame swing high all the way up here at that 48.35 area. And this is probably going to be diddle in the middle territory, to be honest. So be careful, because these buyers and sellers right here already got chopped to pieces. And just because that supply zone looks nice, it's in a chop zone. Okay. It's in a chop zone. So just be careful with that. S&P did drop in. Now they fell off the bullish list, so we no longer have the indices on the list at all. Not at the moment. Okay. Nikkei is a +3. You asked about that. Gold is a +1. Silver is a +4. So if anything, it's the one that's closest to a bullish signal. But you have the Dow at 0, S&P at -1. Yeah, I would advise being careful. And here's the other thing with the indices, and I know I'm almost out of time. In fact, I am out of time. When it comes to the indices, just looking at the latest COT report, they're all sold. So the banks sold off the NASI to the most extreme guys, -5.4%. Dow is right ahead of it. Yeah, S&P, they're both in the 2% range. Nikkei. So the banks don't like the indices, or they didn't last week. So just be careful about trying to buy an asset that the smart money, the guys that make all the money and take all the money from us, turn around and sold last week, if that makes sense. So that's probably about the best answer I give. Be careful with that. They're not even on the bullish list anyway, and the banks sold them. So if Nick made a video about this, the title of his video would be called what? They sold, right? So with that, ladies and gents, I'm out of time. Be careful. Let's get some confirmation on this news out of Iran before we make any rash decisions on leveraging up or full port or any of that nonsense. We don't want to do it to begin with, but especially not until we get some confirmation from the United States for these Iran headlines from a third-rate news agency. Okay, so with that, take care, everybody. Stay safe, and I'll be back tomorrow. Talk to you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.